Hello traders, welcome to another video. In this video, I will tackle about market structure shift versus liquidity grab, right? So I have already mentioned a lot about liquidity grab, and also I have thought about market structure shift in the previous video. But sometimes a lot of traders are using the wrong market structure shift. They thought every change of character or every market structure shift is a valid market structure shift. In fact, liquidity graph are always being mistaken for as a market structure shift, right? So in this video, I will explain to you in detail what's the difference between market structure shift, right? Because market structure shift is a sign of the reversal or continuation, while liquidity grab is just a manipulation. It's a fake move, right? The market will not go in that direction. So first, I will tackle more about market structure shift so that you will know the difference between the two. So first, what is market structure shift? It is when displacement occurs over or below a swing low or swing high. Right? Remember the word displacement. Once again, it has a candle body close. Right? Maybe you have remembered in the last video, I discussed exactly what is a market structure shift, right? So, this is an example of a live market example of market structure shift. So, for example, we are overall bearish, right? We are creating down close candles and then a retracement and another down close candle. Now, we take out this sell-side liquidity right here. This is what we call breakup structure. But this to be a valid breakup structure, we don't want this swing low to get taken out. If this gets disrespected, this will now be a market structure shift, if you remember from the last video. And as we can see, the market disrespected this swing high completely. Now we have a market structure shift, right? This breakup structure right here now becomes a sell side liquidity grab. As we can see right here, this swing high has been disrespected with a big candle. Like I said in the previous slide, market structure shift happens when we displaced higher with a candle body. And as we can see right here, we have a big candle body displacement with a fair value gap. And the price returns into that fair value gap and then continues higher. Alright? Remember, market structure shift occurs when we disrespected the high. If you remember from the order block video, this is our order block, right? We created a retracement. We have here a swing high. When price breaks this low, this will now become a valid order block. But for this to remain a valid order block, you want this area to be respected. We don't want it to be disrespected. But now, the price has gone higher, shifted higher. This is now called a breaker block. Yes. Now we can enter right here. Breaker block plus fair value gap. This is a high probability setup. So this is another example for a bearish market structure shift. Alright, so here we have bullish price actions. We have created up close candles, and then here we have a retracement. Then continuation higher. Here we have what we call this once again, a break of structure. Continuation higher, another retracement. Now when price breaks out into this swing high, this is called once again a break of structure. It is a very weak break of structure. This is still a break of structure unless we break into this swing low right here. Now it will become liquidity grab. Alright, remember? And now we continued higher. This is another break of structure right here. It will only become a liquidity grab if we shifted lower right here, right? As we can see this swing high, we took out these equal lows. And as you can see, the price shifted lower. This is no longer a break of structure. This is now a liquidity grab. The market shifted lower. This is what we call now a market structure shift. As we can see, we have displacement right here, forming a fair value gap, right? And this right here, this is no longer a break of structure. This is now what we call buy-side liquidity taken. Then the price retraced higher into this breaker block right here, overlapping into this fair value gap. Once again, this is a high probability setup. We can enter right here and aim for the nearest sell side liquidity. And there we have it. Now, this is exactly how we identify a liquidity grab, right? So, a liquidity grab is when there is lack of displacement over or below a swing high or low. In the last slide about market structure shift, if you remembered, market structure shift is when there is a displacement over or below a swing high or low. But for our liquidity grab, it happens when there is lack of displacement, right? I hope you are seeing where this is going. And here we have no candle body close. Unlike on the market structure shift, for liquidity grab, we have no candle body close. Right, so this is our example for liquidity grab. So initially we are bearish, we are creating down close candle, retracement right here. When we break this low, this is called break of structure. Another retracement, then continuation higher. We have here break of structure. Then we have here what seems to be a market structure shift, right? No. Why do you think this is not a valid market structure shift? Yes, because we didn't have a displacement, right? We want to see a candle body close from this swing high right here. But we didn't have it. We just have a long wick, which means this is a weak displacement, which means the price is not strong enough to go higher and it might continue lower. When there is a displacement or candle body close, it means the price has a strong willingness to go higher. But if we see displacement right here with no candle body close, this is not a strong displacement at all. This is a weak price action, so it has the tendency to continue lower. This is a liquidity grab. As we already know, market structure shift should have candle body close with displacement, alright? So let's see what the price will do. And as we can see, it continued lower, alright? So for traders who do not know the difference between a market structure shift and a liquidity grab, they might have already entered right here on this breakout right here, thinking the price will now reverse higher. But that's not the case at all. As we can see, the price rejected that swing high because we didn't have candle body close or displacement higher. It was simply a liquidity grab, right? So, what's the difference between liquidity grab and market structure shift? I hope you already know it. It's displacement. Market structure shift, once again, how do we identify it? We want to see a displacement, a candle body close, right? We want to see a fair value gap. Liquidity grab, on the other hand, it has no displacement, right? There's no candle body close. So, displacement means candle body close, like I already said. I need you to take this down on your notes. Yes, this is another confirmation for displacement. When we see a fair value gap, that means there is displacement. There is a big impulse move into that direction, right? So displacement, that means we have a candle body close. And another one is when we have a fair value gap. That is exactly how we know when there is a displacement. All right, so if there's displacement, what will the price will do? It will be a market structure shift. All right, but if there is no displacement, it means we are having a liquidity grab. All right. So with displacement equals continuation. All right. This both happens for market structure shift and break of structure. As we know, break of structure, the price displaced into that direction. The same with market structure shift. No displacement equals sign of reversal. This applies with liquidity grab, all right? But that doesn't mean that if there's no displacement, the price will reverse right away, right? We need more confluence. We want to see price displaced into the real direction if we have a manipulation or liquidity grab, right? So for example, in this chart, we are overall bearish. The price retraced higher, continuation lower, and as we can see right here, the price retraced higher. So a lot of traders, they will think right here is a market structure shift and they will enter long entry right away. And guess what? It was not a valid market structure shift. We only had a week. This is just liquidity grab. We didn't have a displacement higher or a candle body close, right? We didn't have a fair value gap higher. We have here a fair value gap, but this is not a valid fair value gap because we did not displace higher, right? So once again, price retraced lower and tried to displace higher. And once again, we did not have a candle body close or a displacement, right? No candle body close, no fair value gap. So that means this is not a market structure shift, right? This is simply just a liquidity grab. And as we can see, the price continued lower. This is it. This is simply just it. The answer to identifying breakup structure, market structure shift, and liquidity grab. Here's another example. As we can see, initially the price is overall bullish. Then we form here an equal highs. Then the price took out that equal highs. As we can see right here, we have no displacement. We only form a long wick, no displacement, no fair value gap. That means this is a liquidity grab. Yes, you're right. And the price shifted lower. As you can see, with candle body close plus fair value gap, meaning this is a displacement and the price retraced higher. Here we have a breaker block, a fair value gap, meaning this is a high probability setup. We can enter right here, exactly right here, and then the price should continue lower, right? So I hope you learned a lot from this video. I hope you know now exactly the difference between a market structure shift and a liquidity grab. So once again, a market structure shift, it has a displacement, a candle body close, and a fair value gap. And also, liquidity grab, what's the difference? Liquidity grab has no displacement, meaning it has no candle body close and it has no fair value gap. Alright, so that's it for this video. I will see you on the next one.